Hey folks, Lucas here with Coldwell Banker RMR Real Estate and the Ballahhood Group. I hope you and your families all had a wonderful Halloween and everyone got a good loot of candy and enjoyed pumpkin carving and all those fun things in the season. Certainly we did. My boys dressed up as Spider-Man and Batman. I found myself as Clark Kent. Real trouble finding adult-sized superhero costumes, I will admit that. But the reason I'm recording you this video, folks, is it's the 4th of November, and the market stats from the Durham Association of Realtors have just been released from the month of October, and we saw certainly some significant changes in the amount of activity going on in Durham Region right now. The average sale price did drop around $22,000 compared to last month, that being September. Year over year, we did see a 10% change, and that would be a negative change, 10.6%. Just checking my notes here, year over year compared to last October. The number of sales is down about 40%. We're at 632 sales this past month compared to over 1,000 last October. So the demand has certainly changed, quite a bit in Durham Region, and a lot of that's going to be motivated by, the cost of borrowing. We did see this past month a rate increase on the 26th of October, and that's going to take that recent rate increase is going to take effect in a couple of months down the road. I think this latest change in the average price is really from those buyers who were qualified a couple of months ago and have exercised those rate holds and purchased for what they were able to. The average sale price, or sorry, let's rephrase that one. The list of sale price is rated 100%. It's basically the underlisting going way over asking. It's not very common these days, depending on the price point in the area, type of home. Certainly that's where we've seen that strategy being used a little bit, but most properties now are being priced closer to market value. So if there's something out there that can be had for a deal in a buyer's eyes, because there's less competition as well, you're in a better position to make that purchase. Our days on market is recorded as 16 days. We know the relist market is, number of homes that are relisted is, represents about 25% of the market overall. But, we are seeing things hold for the most part over the last 4 months here. We were in the, I think it was 968 was the average sale price in Durham. So over the last 6 months, we're not too far off. It needed to happen. Now, a lot of this shift in the market has been contributed to or caused by the rising interest rates and this quote unquote recession that we're sort of coming into here in North America. I recently attended a RBC Global Asset Management conference or event here this week, and they brought an economist in to talk about the investment markets and that part of their business. But there's a strong tie to real estate, not only with I guess the connection there is related to inflation, right? And they're describing this recession as being certainly a necessary one and one that is more, let's say, useful overall for the economy. When we looked, they showed some very interesting graphics on the sort of performance of the SP 500. It's one of the big global stock markets in the U.S. And that trajectory line pre-pandemic to where we are today is actually there's a strong correlation that it is back on track as to what it was doing in 2019 compared to 2022 today. But in March of 2020, there was this blip when everything shut down, and the government had to institute some policy changes like making borrowing money virtually free, and that caused a bit of a bump in the curve that was an unnatural one. So even though the market is coming back down again, it's still following with that, excuse me here on the microphone, following that natural trend line. So we are back to where we probably should have been on the average sale price side of things compared to a few years ago when the average price was in the mid sixes, and now we're in the high eights. So, this is probably where we should have been. Now, with respect to inflation and the interest rates, that is going to take hold, on buyers' borrowing power. And certainly those in the position where you have to refinance. we're seeing people now taking shorter term loans and potentially even locking in to a fixed rate because now we're seeing folks having to qualify 8+% when you're talking about that stress test. So that's where it impacts our cost of borrowing in the near term here. By the end of next year, we should see those rates come back down again, and if you're in a position there where you can refinance at that point, then certainly it'll be in a more favorable position. But you definitely want to talk to your mortgage advisor or your bank about those options and what's available for you there. So, without getting too lengthy with this one here, folks, if you have any questions or curious what's going on in the market, or you're thinking about making, a move or buying an investment property in the next 6 to 12 months, let me know and we can chat about it and come up with a plan of attack. So, have yourselves a lovely start to November. Thank you so much for viewing this video here today, and we'll talk to you again soon. Bye for now.